International Accounting Standard Boards published the new lease standard, IFRS 16, which will be effective from the 1st January 2019. The new standard brings a new definition for lease based on the right of use of an asset and introduces a new accounting model for lessees, aiming at providing additional comparability and transparency between organizations. The two lease models, operating and financing, currently applied by lessees under IAS 17 will be replaced by a single approach under which all assets will be recognized on balance sheets. Lessees will recognize all assets in use on balance sheets and a corresponding liability. The standard will require lease components to be separated. Parts related to services will have to be recognized based on IFRS 15 rules. On the profit or loss, the level of expenses and the pace at which these costs are recognized will change, leading to a front-loading effect on those costs over the lease term. From what we see in our client base, all companies operating on a rental and lease agreement will be impacted. Impact will be noted on the gearing ratio, with additional liabilities brought into the balance sheet, and on the EBITDA. As IFRS 16 effective date approaches, companies need to act now. We are currently working with clients on IFRS 16 transition, offering practical support around training. Finance team needs to be trained to understand the requirements from IFRS 16, around impact assessment, starting from a review of the current arrangement in place and gathering information from disagreements. And from the impact assessment, needs must be identified and a plan to transition established. A point to note, it's expected that IFRS 16 changes will be brought into IFRS 1 and 2 as well, as part of the next cycle of reviews in around 2022. IFRS 16 will have a significant impact from 2019, so companies need to get ready now.